If you look closely at the global economy, it basically runs on this, well, a hidden physics engine.
Yeah, a physics engine that people usually think is incredibly boring.
Exactly. I mean, we're talking about accounting for today's deep dive,
Yeah.
but our mission is to totally shatter that illusion for you.
Because the actual timeline is wild.
It really is. Our sources trace this evolution from a Renaissance monk who hung out with Leonardo da Vinci right up to, modern artificial intelligence.
And it's all triggered by a very specific date, May 25th.
Right. Accountant's Day.
Yeah, which isn't just some random calendar filler.
Yeah.
Back in 1907 in Mexico, this guy, Fernando Díez-Barroso, passed the very first professional exam for commerce accountant.
Which is a huge milestone.
Completely. He essentially legitimized the profession in that region.
Mhm.
He planted a flag for a discipline that, well, it actually reaches way further back.
Right.
To really get the gravity of what he was studying, you have to rewind to 1494.
Okay, so this is where the Da Vinci connection comes in, right?
It is. There was this Italian Franciscan friar named Luca Pacioli, and he was actually close friends with Leonardo.
Wow, that is a pretty great claim to fame.
I know. And he published a book called Summa de Arithmetica. Now, he didn't invent accounting, but he formalized a system called double-entry bookkeeping.
Because before this, medieval trade was just pure chaos.
Oh, absolute chaos.
Yeah.
Merchants had these totally fragmented records, just debts scribbled on scraps of parchment.
Right.
They had no real way to know if a specific voyage actually turned a profit.
That sounds incredibly stressful. But Pacioli solved that chaos by documenting a system where every single transaction requires two simultaneous entries.
He did. So, like, if a merchant buys silk, their inventory asset goes up, but their cash goes down.
Making a closed loop.
Exactly. If the two sides don't balance perfectly, you instantly know there's a mathematical error or missing money.
It's essentially Newton's third law of physics, but applied to money.
Oh, I like that analogy.
Yeah, for every financial action, there is an equal and opposite reaction.
And that underlying mathematical mechanism is so flawless that it really hasn't changed in over 500 years.
That is nuts.
Any modern corporate balance sheet you look at today operates on the exact same logic Pacioli wrote down back then.
Okay, so the math hasn't changed, but the tools certainly have. Think about the 20th century accountant.
Totally different world.
Yeah.
They were essentially human recorders.
Right, dealing with physical ledgers, those heavy crank calculators.
And the sheer terror of spending 3 days tracking down a single missing cent to close out the month.
Just brutal. But today, the landscape is totally dominated by cloud computing and XML invoices.
Which completely shifts the workload. The people often hear digital invoice and they just think of a scanned PDF.
Right, like a picture of a receipt.
Yeah, but XMLs are structured data files. They contain these specific tags that algorithms can read natively.
Ah, okay.
So the software parses the data, categorizes the expense, and reconciles the bank account in milliseconds. No human eyes ever need to scan a physical document.
Wait, let me push back here for a second. Sure. Because if the software is parsing the tags natively and categorizing the data flawlessly, then what is the human actually doing all day? If algorithms are handling that flawless closed loop we just talked about, doesn't that make the human accountant completely obsolete?
See, that assumes the value of the job was simply doing the math.
Well, wasn't it?
Not really. The math was just the prerequisite. Technology wiping out manual data entry didn't kill the accountant. It actually liberated them.
Liberated them how?
Well, an AI can instantly read an XML file and flag that, say, a company's raw material costs went up 12%.
Oh, okay.
But the algorithm lacks real-world business context.
Because it doesn't know what to actually do with that 12% increase.
Exactly. That is where the human steps in to interpret that data. They play out the scenarios.
Like deciding if you should absorb that cost.
Right. Or do you restructure your debt? Do you pivot your supply chain to survive a looming tariff change?
So the software provides the current board state, basically.
Yes. The software provides the board, but the human accountant is the chess player. They're thinking 5 moves ahead on ambiguous tax laws and cash flow forecasting.
Wow.
They've evolved from recording the past to actively modeling the future.
So next time you look at a business's financials, don't picture a human calculator just tallying up receipts.
Definitely not.
You are really looking at the work of a financial data scientist, someone who translates raw algorithms into actual survival tactics for a company.
They are taking that exact same elegant logic from 1494 and using it to stress test tomorrow's business strategy.
Which really leaves you wondering, If artificial intelligence is stripping away the mechanical tasks of accounting and elevating these professionals into high-level strategists,
Yeah.
what other traditionally repetitive jobs are secretly evolving into strategic powerhouses right under our noses?